to see a crypto rally into the end of the year, and it's
The market's bleeding, influencers are panicking, and every news anchor suddenly sounds like a prophet of doom. But here's the twist, not everyone is panicking. Because somewhere between the chaos and the fear, Tom Lee, one of Wall Street's most consistent optimists, said something that almost nobody's actually hearing right. Lee looked straight into the camera and said, "The crypto sell-off isn't the end. It's a reset, a setup for something much bigger." And yet, the internet did what it always does, twisted his calm realism into clickbait hysteria. Tom Lee admits Bitcoin's in trouble. Crypto bull finally gives up. No, that's not what he said. And if you actually listen to his logic, especially through the XRP lens, you realize everyone is wrong about this crash. Let's rewind for a second. When Tom Lee talks, the market listens, not because he's always right, but because he understands the rhythm of investor psychology. He's the guy who called the 2020 recovery when fear was at its highest. He's the one who said volatility is the price you pay for asymmetrical reward. So when he looks at this current dip and says, "It's not the end," that's a clue. The problem? Most people don't see XRP through that lens. They treat it like a speculative token, not what it really is, the backbone of a new liquidity network forming beneath the noise. And this is where everything flips. Because while Bitcoin's narrative is digital gold and Ethereum's is Web3 infrastructure, XRP's is cross-border value plumbing, the part of the system that actually moves money when institutions finally go digital. So when the market crashes, what's really happening isn't destruction, it's decoupling. Tom Lee hinted at this indirectly when he said that institutional rotation is natural during tightening phases. Capital doesn't leave the ecosystem, it reallocates. Now look around, retail panic, yes, but behind the scenes, Ripple is still signing deals with banks, expanding into Latin America, building corridors in the Middle East, and talking regulatory frameworks with Asia-Pacific partners. So wait, how can the crash be real if the adoption hasn't stopped? It's real emotionally, not structurally. And that's where Lee's calm tone makes sense. He's not saying, ignore the red candles. He's saying, understand what the red candles are telling you. Markets don't crash when fundamentals are weak. They crash when narratives shift faster than people can process them. Right now, the narrative is fear, fueled by headlines, short-term traders, and a wave of AI-generated panic on social media. But fundamentals? Ripple is literally working with global central banks, while the same critics who laughed at XRP 3 years ago are now quoting IMF reports about digital liquidity hubs. So when Tom Lee says this correction might be healthy, he's echoing what patient XRP holders have been feeling for years, frustration mixed with quiet conviction. Because every crash in XRP's history, 2018, 2020, 2022, ended with it coming back leaner, stronger, and more institutionalized. This one isn't any different. Here's what most people miss. Lee's entire thesis revolves around sentiment mean reversion. That's a fancy way of saying, extreme fear sets up extreme opportunity. And if you look at XRP right now, it's sitting in the exact same psychological pocket it was before every major rally in its past cycle. Still think everyone's right about the crash? Or is it possible that the market, once again, is emotionally misreading a setup for the next phase of adoption? Because if Tom Lee's read on the macro reset is correct, then this downturn isn't punishment. It's positioning. And the token most misunderstood by retail XRP is the one most perfectly aligned to benefit when clarity finally arrives. So before we jump into the doom threads and Reddit chaos, let's slow down. Let's decode what Tom Lee actually meant, and why his logic could secretly be describing XRP's next asymmetric setup. You know, one thing I've always respected about Tom Lee is that he never speaks in panic tones. When everyone else is screaming, crypto winter, he's usually the calm voice saying, zoom out. And that's exactly what he's doing right now. See, Lee's perspective on this so-called crypto crash isn't that the market's collapsing. It's that the market's detoxing. In his own words, corrections are painful, but they reset the system for a healthier next phase. And that's where most people completely miss the plot when it comes to XRP. Because what's happening with XRP right now isn't collapse, it's compression. Think about it like a spring being pushed down. The energy doesn't disappear, It's just building, waiting to be released. Tom Lee calls it the reset before resilience. And if you apply that lens to XRP, you start seeing something the panic crowd can't. Let's break it down. When Lee looks at the market, he sees macro tightening, interest rates up, liquidity low, fear index high. To him, that's not a death sentence. It's the emotional cleansing phase that shakes out weak hands and speculative noise before the real players, the institutions, step in. And here's where it gets wild. That's exactly what's happening around XRP. While retail is selling out of fear, the underlying infrastructure around RippleNet is expanding. Banks in the Middle East are quietly integrating cross-border corridors. Asian payment networks are testing CBDC interoperability using Ripple's tech. And in the US, Ripple's legal clarity post-SEC ruling has made it one of the few digital assets with an actual regulatory path forward. So when Tom Lee says this crash isn't the end, but a setup for something much bigger, he might not even realize he's describing XRP's exact position in this global reset. Because XRP isn't trading on hype, it's trading on misunderstanding. And that misunderstanding is creating one of the biggest asymmetric setups in crypto. Let's get practical. Lee's model, the Fundstrat Market Resilience Index, measures how price trends compare to investor sentiment. When sentiment is way below fundamentals, he calls it an oversold optimism gap. Basically, the market's short-term emotions have completely detached from long-term reality. Sound familiar? That's XRP's story in one line. The fundamentals. Ripple wins major legal clarity. On-demand liquidity, ODL corridors expand to dozens of countries. Central banks discuss integrating Ripple's technology for faster settlements. Institutional partnerships keep growing globally. The sentiment, XRP's dead. Crypto's over. Tom Lee admits it's a crash, completely disconnected. And that's where Lee's thesis becomes prophetic for XRP holders. He argues that markets don't bottom when fundamentals are gone. They bottom when hope is. And right now, hope's been sucked out of the crypto space. Perfect timing for conviction to pay off. It's ironic, really. Everyone quotes Tom Lee's optimism when prices rise, but they ignore his framework when prices fall. Because his entire philosophy is built around one truth. Volatility is the toll you pay for exponential innovation. And in XRP's case, that volatility is hiding something deeper, the quiet institutional accumulation phase. While retail screams about price dips, large wallets are consolidating. While social media debates relevance, Ripple is building liquidity corridors across 3 continents. And while everyone's staring at red candles, the company behind XRP just launched a US-based stablecoin pilot, something the mainstream barely noticed. Tom Lee would call that signal hidden in noise. He often reminds investors, the time to position is when others can't see. That's literally what's happening with XRP right now. The narrative is fear. The setup is infrastructure. And the outcome, well, if history repeats, it's going to shock the same analysts who are writing it off today. Let's not forget, this isn't the first time Lee's been contrarian. Back in 2018, when everyone declared crypto dead, he doubled down, and then 2020 to 2021 proved him right. He said the same thing during the 2022 bear market. Macro resets are where long-term returns are born. He's saying it again now. So here's the big question. If Tom Lee's logic is that resets breed opportunity, and XRP is currently sitting on the most resilient legal and institutional foundation it's ever had, then what does that make this so-called crash? Exactly, it's not an ending. It's a repositioning. Every signal Lee studies, fear index, on-chain data, macro liquidity flows, points toward the same story. The market's overreacting, the fundamentals are consolidating, and the next move won't come from hype. It'll come from clarity. And clarity, in this space, has a name, XRP. So while everyone else is debating whether crypto's dead, Tom Lee's message, if you actually listen, is that we're entering the most interesting setup phase of the entire cycle. And if you're holding XRP, that setup could mean the difference between being shaken out or being positioned for the reset he's been warning or hinting about. Tom Lee isn't just talking about some abstract crypto price chart. He's talking about the systemic rotation of capital, the quiet shuffling of financial gears behind the headlines. and XRP is sitting right in the middle of that rotation. Think about it like this. The financial world is waking up to a truth most retail investors can't see yet. Traditional cross-border payments are slow, expensive, and outdated. Banks and institutions are desperate for faster, cheaper liquidity solutions. And that's exactly what XRP was designed to provide. Tom Lee's reset framework is essentially this: markets dip, fear peaks, but the structural story doesn't change. If anything, it gets amplified. For XRP, that story is crystal clear. Legal clarity. Ripple has finally navigated the murky waters of regulatory uncertainty in the US. This is huge. Most cryptos are still shadowboxing with regulators, but XRP now has a path forward that can withstand scrutiny from the SEC and other authorities. Institutional adoption. Every time Lee talks about rotation, he means the shift from hype-driven retail capital to strategic, institutional players. XRP's ODL corridors, the partnerships with banks across Asia, Europe, and Latin America, are exactly the kind of infrastructure moves that fly under the radar but lay the foundation for explosive long-term growth. Global financial relevance. Unlike speculative tokens, XRP is tied to the flow of actual money. Central banks discussing digital currencies? That's the conversation Ripple is already part of. The red candles you're seeing on charts don't touch the real-world adoption metrics happening quietly in boardrooms and global payment networks. Here's the subtle genius in all of this. Tom Lee's market reset concept explains why XRP can dip while adoption accelerates. The retail panic creates liquidity. The institutions swoop in. The narrative hasn't caught up yet, which means this is exactly the setup Lee talks about for asymmetric gains. And it's not just theory. Look at the patterns. Every major XRP rally followed a period of skepticism and emotional selling. 2017, everyone laughed at XRP. 2020 to 21, red candles, doom threads, and yet by 2021, the network effect exploded. History loves repeating itself, or at least rhyming. Now, let's connect this to the global financial shift Lee keeps hinting at. Traditional banking systems are under pressure. Inflation, interest rates, and geopolitical uncertainty have forced institutions to reconsider how they move capital. SWIFT is slow. FedNow is new. The world is finally realizing that liquidity must be real-time, cross-border, and frictionless. And XRP's tech is one of the few that's actually battle-tested to do this at scale. So what does that mean for the crash narrative? It means it's backward-looking. The headlines are focused on short-term dips, but the structural adoption, the regulatory wins, the corridor expansion, that's all forward-looking. And that's exactly why Tom Lee's perspective matters. He's not dazzled by the noise. He sees the underlying currents. This is why the "everyone is wrong" line from the start isn't clickbait. It's reality. Retail traders react emotionally. Influencers chase views. But XRP is quietly moving into a position of strategic financial relevance. The reset Lee talks about, that's happening right now. And once the market realizes it, the magnitude of the next move could be staggering. Here's the takeaway. The current dip isn't a death sentence. It's a window of opportunity for those who understand the macro story. Tom Lee's reset framework shows that corrections aren't setbacks. They're springboards. And XRP, sitting at the intersection of regulatory clarity, global adoption, and institutional demand, is perfectly positioned to take off when sentiment finally catches up. So while everyone else panics at red candles, what if you just don't? What if you zoom out, see the macro rotation Lee is hinting at, and realize that the crash is just part of the setup for the next big XRP move? And that's exactly why analyzing Tom Lee's perspective isn't optional. It's essential for understanding why XRP might just defy the chaos and emerge stronger than ever. I've been walking you through why Tom Lee's perspective makes so much sense for XRP, why this crash might actually be a setup, and why the fundamentals are quietly stronger than ever. But crypto isn't magic. It's messy. And XRP, like every asset, comes with its own set of risks. First, market volatility. Even if you believe in the fundamentals, price swings can be brutal. That's why Lee's reset concept works best if you think in weeks, months, or years, not hours. You can't let short-term fear dictate your moves. Second, regulatory uncertainty still exists globally. Yes, Ripple has cleared major hurdles in the US, but other countries could introduce new rules that affect XRP's adoption. It's unlikely to derail the network, but it could create temporary turbulence in price. Third, macro factors. Interest rates, inflation, or global liquidity shifts can influence crypto sentiment across the board. Lee's analysis accounts for this, but the key is that XRP isn't purely speculative. Its adoption trajectory is structurally independent, meaning long-term growth isn't erased by temporary macro noise. Now, here's the exciting part, the opportunity. If Tom Lee's thesis is right and this crash is just a reset, then XRP is sitting in a prime asymmetry zone. Imagine this. The market is scared, retail is panicking, headlines scream doom, but behind the scenes, banks are adopting, corridors are expanding, and Ripple is building the infrastructure the financial system will rely on. Historically, these setups produce explosive gains for patient holders. And this isn't just hypothetical. XRP's past cycles show exactly this pattern. Fear, resets, consolidation, then adoption-driven growth. So what do? Hold conviction, not FOMO. Focus on fundamentals. Adoption, regulatory clarity, partnerships. Ignore the noise. Social media panics are rarely correlated with structural progress. Tom Lee reminds us that real opportunity happens when most people are blind to it. And right now, if you look past the headlines, XRP is the clearest example of that principle in action. Here's the final thought I want you to sit with. Every red candle you see isn't a signal to run. It's a signal to position strategically. Because once the reset phase ends, the momentum that follows could leave most people wondering how they missed it. So if you're holding XRP, take a deep breath, zoom out, and remember what Tom Lee's perspective really means. The crash isn't the end. It's the beginning of the next chapter. And hey, if this breakdown helped you see XRP differently, make sure you like, subscribe, and hit the notification bell so you don't miss the next deep dive where we decode the market while everyone else panics. Because in crypto, knowledge isn't just power, it's profit.